You can see my screen now. Hello? Hello?
Yes, I can see your screen. Yes, I can see your screen.
So this is a VPS. So what that VPS does, or RDP, like is a remote computer in another location. So my computer is just serving as a mouse or keyboard to that computer. You understand, right? As you can see, this is a Windows 10 PC. You see it. But I'm coming. Let me look for a way to hide this control bar so that there are things I need to. Okay. So this is another this is another computer. So it's a VPS or remote desktop. You understand?
Mm-hmm.
Okay. So whereas this is my own normal computer that you are seeing here. So
So why
there's
are you using a VPS?
yeah the reason why I'm taking you to a VPS, I've set up the trading platform here already. So this is where I'll be explaining everything to you. You understand? So that's why we have
Okay.
VPS. Later on, I'll tell you the advantages of using a VPS.
Okay.
So, so to get started, actually, this forex trading is the normal bureau de change that we see in the bank and other institutions. So that's
Okay.
so forex the forex there is short for foreign exchange. You understand? So how in the past, large organizations, they come together, more than 2,000 banks, they come together worldwide and they trade currencies. So, but with the
Mm.
introduction of computer, we are able to add our own money to those banks and trade with those money in real time. You understand? So that we get the profits instantly. We are like we get our profit instantly as if we just actually exchange our naira to dollar, then exchange it back. So the terms you'll be hearing in Forex, you'll be hearing something like buy or sell. Those are the two regular terms. But before I explain them to you, let me give you an example on how Forex works. Let's assume you buy a gold chain or you have a gold chain.
Yeah.
Then that your gold chain that you are having, something just tells you, oh, I don't know how you got the information, but you got information that gold is going to be so cheap in the next 1 year time. But when you got yours, is not that too expensive. Let's say you got your gold chain for 80,000 naira. So, but
Mm-hmm.
you have that info that in the next 1 year time, they will be selling gold exactly the type you have. They'll be selling it for 50,000 naira.
Mm.
There are things you can do to benefit from this. One of the things is this: you bought yours 80,000 naira.
Yeah.
So if
Mm-hmm.
you see someone that wants to buy that same gold chain for
Yeah.
80,000 naira, or let's say for 75,000 naira, so that you lose 5,000 naira at the moment, you
Mm.
can go ahead and sell to that person. After selling to that person, you can now wait for a whole year. If the prediction is correct, you can now buy that your gold back for 50,000 naira in the market. Then you keep 25,000 naira as your profits. You see the way it goes.
Okay.
Mm. So,
Yeah.
that's exactly how Forex works. What I just described is the selling process. So if you think the market is going to go down or is going to drop, you sell. You understand, right? Then for the buying process, let's assume you are having you are having naira. One of the things that inflates now in Nigeria is dollar. You understand? You're having naira. And let's say you have like 100,000 naira. That 100,000 naira, you are not using it for anything. But it was last year. Last year, let's say January last year. You don't want to use the 100,000 naira for anything. But somehow you got information that in a year time, the rate of dollar will be 1,600 naira per dollar. That's your 100,000 naira. You now use it to buy dollar and you keep $100. You're able to buy just $100 with your 100,000 naira. Now that dollar have risen to 1,600 naira, you gain 600 naira per dollar. And for that $100, you gain 60,000 naira. So now you can now swap your money back to naira after you bought dollar last year. So if you want to use your money back, you can now swap the dollar back to naira. Then you've made profits of 60,000 naira just within that duration. So that's exactly how Forex works online and everywhere. You understand?
Yeah.
So now in the Forex markets, let me launch FTMO. So this FTMO, on my screen, you can see FTMO, you can see Alpari. Nevertheless, these are demo accounts, which is it is an account that I'm running without putting our own real money into it. You understand, right? So it's called a demo account. Now, in this demo accounts is the same like the real accounts. The only difference there is that no money is involved.
Yeah, virtual money and real money.
Yes, yes. So for you to trade your currency pairs, usually we trade all these things in pairs. We trade Forex in pairs. Why they trade this? Why they trade Forex in pairs? This. Let me open a new chart. So the reason why they trade Forex in pairs are this. When, for example, you want to trade on, I'll relaunch this app. So the reason why they trade it in pair is this. If you are trading in USD GBP, which is USD stroke Great British Pounds, if you are trading in that pair, put in mind that, okay, let's go for Euro USD.
So you cannot just trade just USD.
You cannot just
you must trade USD and something else.
Yes, yeah, you can't just trade only euro. You must trade it with another pair of currency. So they goes in pair. You understand? So the prediction, like this Euro USD that I've opened, any prediction I'll make in this terminal, it will just be for Euro stroke USD. You understand, right? What this is that I have Euro. Then I want to swap it to USD.
Okay.
As the Euro USD. Now this AUD CAD, Australian dollar, slash Canadian dollar.
Canadian dollar, yes, Canadian dollar.
So what it means is that I have Australian dollar.
Dollar. And you want to trade it with, you want to exchange with Canadian dollar.
Yes, yes, yes. So with this in mind, in the interface, we have this chart. This chart is actually called a candle. At this point, it is in line. Let me put it
It's called a what?
a candlestick. The charts. Usually, people
Okay.
prefer these candlestick charts. So I'll zoom in so that we. Okay. So there are so many, we can customize the candle as we wish, you understand? I'm the one that just
Mm,
the color to green and white. So if the market is
yeah.
going down, it's recorded as green. But if the market is going up, it records it as sorry, it record as green.
White.
But if it's going up, it's record as white. So with this, we see that the market went, this last candlestick that is forming, market went from bottom to top, which is the market is going up. If the market is going up, you say the market is rallying, which is rally. The market
No,
rallies.
you said if the market is going up, is what?
The market rallies. So then if it's going down, market falls or it is falling. So at this H1, it is a 1 hour time view of what is actually happening between the euro and the USD. So,
You say what is a 1 hour? Sorry.
okay, this is a 1 hour time frame, this H1.
Okay.
Like
Yeah, each one.
it will take a candle, another candle 1 hour to form. For the candle,
Mm,
which if is in 1 hour view, what this candle is actually telling us, within an hour, this one single candle
mm,
1 hour. But within that 1 hour, euro
mm,
is rising against USD.
yeah.
Some hours back, this particular candle, it shows that USD is rising and euro is falling. You see it. So
Yeah.
so this is a 1 minute time frame. So this 1 minute time frame, it takes 1 minute for another candle to be born. But each minute, it tells the exact parts of if the Euro USD is rising or if it's falling. You can see that in that 1 hour time frame, it's still just one candle. But while we were just
Mm.
looking at this 1 minute time frame, another candle has been born.
Another candle again has been born.
Yes, yes. So they just tell what is happening by the minutes.
And that candle has fallen down too. It's falling too.
Yeah, yeah, yeah. Yes.
It fell off and then it's coming up again. So it's not like the market is stable.
No, it's
It
not
falls
stable.
and go up, falls and go up.
Yes, and it's
So
not
it's falling again.
yes, and it's not easily predictable. Although there are so many patterns that people have bring out to predict the markets. For example, now we can see that the from what we are seeing like this, we can see that the market went up. So most people, if they see something like this, they'll just predict that the market will go up. Then they buy. You see it.
Mm.
So there are
Yeah.
so many tools one can use to predict the markets.
Yeah.
So many tools. So that's the basics about the buying and selling. In the Binance, in each of these candles, there's people usually read meaning to them. Those meaning, most times they work. You understand, right? Most times, but
Yeah.
sometimes they don't work. For example, now, let me look for a candle that I can read meaning to. Okay. You see, this part of are you seeing the mouse?
Yes, I've seen your mouth.
Okay. You see, what I've noticed so far that is always true. If there is a small candle that is like an hammer,
Mm,
and there are two candles that are full to the left, and two candles are full to the right. Usually, the market used to
mm,
go up. If I see
mm,
such pattern, I usually buy. You understand? So most times in the morning, if you see this pattern, market goes up. Then if you see it in the evening time, the market goes down. So I think it signals that the market wants to rise or it wants to fall. That's just what I think. You understand? So with it,
yeah.
I enter trade. Whereas some people, they go with the trend. For example, now as they see that the market has been rising from this level to this level, they'll just predict that the market will continue to rise. Now, let's place our first order. Like, let's make our first prediction. So to place our
Mm-hmm.
first order, what we are going to do is to click on this new order,
New order. Mm,
F9 on your keyboard. Um, Otherwise, you go to the tools and you click on new
mm,
order. So whichever way. So to place, we have in placing an order, we have two kind of orders: market execution order and pending order.
wait. Oh. So to create an order means to trade back.
Yes, it means to trade. Then for you to trade, we have two kind of
Wait.
order.
I'm writing down. Sorry.
One is market order or market execution order. Then the other one is
Please, can you just hold on? Let me just write. You said place an order, types of order. We have the first one is what?
market execution order or market order.
Market
Then the second one,
execution
then
order.
the second one is pending order. Pending order.
Okay, pending order.
Okay. Um, you may wonder why there are why there are two ways to place.
Yeah.
The reason why there are two ways to place an order is this. Now, I think the market has continued to rise, right?
Mm-hmm.
So since it is rising, if we buy and the thing continues to rise, we'll have our own
Mm.
gain. You understand? We can now sell and hold that gain. So the moment I click on this buy, if it is on market execution order, immediately I click on this buy,
Mm-hmm.
we buy automatically.
Okay.
You understand? So
So market execution order is buying immediately.
yes, so you buy at the point where the market is. So you see this line that is forming the candle. The place where the line is, if you put it on market order, you press on.
Please hold on. Can you just hold on a little?
Okay.
Buying immediately at the point at which the market is okay. So buying market execution order is like buying immediately and at the point at which the market is at that particular time, right?
Yes, yes.
So you're trying to explain something.
Yeah. So since we buy this in market order,
Mm,
buy,
mm,
it means we think the market will go up. So if the market never goes up and is going down, we are losing, just as you can see in this trade here. You can see that we are
Yeah.
0.08 pips, which is minus 0. But if this line goes above our market order, then we'll be gaining. Then
Okay.
this minus will turn to a positive sign.
A plus sign. Yeah.
So now, since we've placed our first order, we are running at loss now,
But
but
I
this,
didn't I didn't see you select amount of how much you want to use to buy, like to place the order when you were placing your new order.
okay,
Please click on the new order again. Let me see. Click on the new order.
okay.
It's, I not see put your the amount you want to spend.
Yeah, the reason why you did not see me put amount that I want to put is because this volume is related to
Mm,
how much that I'm willing to put in this trade, this volume. And when I was opening this account, there is
yeah.
something called lots. So that lot like is a configuration on how much are you willing to stake each time you are placing a trade. So
Okay.
usually our lot was set to 1, meaning we are trading at $1 each time we are trading. It's unlike
Yeah.
that we used to build that like that's FS those management crypto sites. This one is a little bit different from them in that settings, but they all do the same
Mm.
thing.
So your own, you have already set the amount you want to be trading with when you were signing up.
Yes, it's like a fraction of the total money I have.
Okay.
So I can increase the volume if I want. But
Mm.
big volume, it means big profits and it may mean big loss.
Yeah.
Now,
Exactly.
if you notice, our under our trade, you can see that we are now having a profit of 2 pips,
So
which
yeah.
is 0.02. Is because the market has increased
Past years have
versus
increased.
what we predicted. So the most of so now in the pending order, this is how pending order works.
Okay, hold on. Pending
Yes.
order.
So in the pending
Okay.
order, let's assume now, let's assume you think the market is going to drop, or
Mm, mm,
is going to rise, but we want to enter in at the trade at a particular level. I don't know if you get, like if it gets to this level, then we want to buy or we want to sell. So those kind of
okay.
order are pending orders. So we'll
Okay.
create the order, but it will not be executed immediately because the market has not yet rise to the point or is not as low to the point where we want to enter in at the trade. Do you get it?
Mm,
Okay. So for pending order, we need to set our price. So let's say we enter the first one around 1.07955, around that
mm,
part, right? So if we want to enter
mm.
another trade at that point, we'll select the price at which we want to enter it. 1.075.
955.
Okay. Now, what we want is that if it gets to that level,
Mm-hmm.
hmm, that is
Mm-hmm.
want to buy. Let's make it a little bit smaller. Okay. So if it gets to 1.07950, that's when we want
Yeah.
to buy. You see it? So once
Yeah. That means the market, when the market has come down.
yes, anytime the market touches that our line, let me decrease it again.
Yeah.
70. Let me decrease it. So I've decreased it again to 1.079.
Nine, yeah, it's 937.
So if I place this order, look at where the order is placed. So you,
Yeah. Hello?
yeah, hello. Are you talking to me?
I didn't, I stopped hearing you. So once we place the order there, we'll have to now wait till the line, like the market gets to that point, then to now buy
Yes,
the
yes,
currency from it.
yes. So if you can see this order now, it has not
Mm,
started reading yet. So it needs to
yeah.
wait for the market to get to that line. Then we'll enter in the trade as buy. So as it is
Mm,
like this now, we can edit this trade either by double clicking on that our line.
yeah. To
Understand?
edit.
We can modify it. Okay, I still want it to be pending, but this time I want to sell when it gets to that place. You understand? So you can
Mm,
still modify that particular order if it is still on
yeah.
pending. You understand, right?
I'm pending.
Yeah.
Yeah.
So those are the two kind of orders that we have: market execution order and pending order. So most times they are no they are they, well, they are professionals in this field, but it's a matter of statistic and calculation. So um, let me see if there are other things I can talk about in this trading. Then this is the main or the key points. Now, while trading, we see that it is a very difficult task. You understand?
Mhm.
So this for the Zoom meeting. So what people now do is this, they now employ robots to trade for them. So
Yeah.
those robots are called expert advisors or trading robots. So of such, we have one advisor here, sub trade manager. So what this sub trade manager does is this, it monitors all the trades that are being opened. Then it decides, it makes decision either to close those trades at a particular time or
Mm.
to close them when they hit a particular profit or close them when they hit a particular loss. I don't know if you get the idea.
Yeah. So this is that tax that Mr. Choi says you should test.
Yes, this is the stock trade manager. So for you to configure the stock trade manager, you click on this icon, this smiley
Mm.
icon. Then for you to load this sword manager, I've already placed it in this navigator bar. I This is the latest one, version 4.2. So to launch it for the first time, you have to double click it here in this
Mm.
pane. But once you've launched it, to modify the settings, you just need to click on this smiley face. Let
Mm.
me go ahead and maximize it so that we can see it all. So First and foremost, we'll see the account size. This account size is for you to tell the manager how much is in that account that you want it to manage. If the money in your account, if it's very small and you put big money, it will think the money in your account is big and it will take bigger risk. You understand? So
Mm.
if it takes bigger
Mm.
risk, at the end of the day, it fails. Of course, you lose your money. You understand, right? So it's good you put
Mm.
the exact amount that you have. Then balance fresh. What this balance fresh
No,
means is
the exact amount you have, that's what you're going to put there. I
yes,
mean the exact amount you want it to manage.
no, the amount you have in that particular
Okay.
account. You understand?
Yeah.
Okay, one of our trade just kicked in now.
Mm.
That's pending order. It just
Yeah, I can see it now. Mm.
so now balance fetch. What balance fetch? It can automatically check your trade and see how much you are having. We set it to true. Enable daily exits. What the daily exits means is this,
At what point does it close for the day?
Does
Like,
this
does it exit or stop your trading?
yes. So yeah. So at that time, at a particular time, we set it to 6:45, meaning in the morning. So exactly 6:45, it closes the whole trade. Either we are running at loss or we are in profits. It closes all the trade. Then this overnight resets, we set it to 1900, 15, 18, 9, meaning 7 o'clock in the evening. What it means
Mm.
is this. All these statistics you see on this dashboard,
Mm.
it will reset the whole statistic at 7 o'clock in the evening. This is the overnight resets. Now, this part, loss limit management. What the loss limit management does is this. Hello, please excuse me. Let me just check. Um, the Zoom is no more on, right?
It's still on, I can see.
Okay. So what this daily loss limits does is that while you are trading or while a robot is trading for you, if he sees that the loss, you've lose so much up to $9,000 that same day,
Mhm.
you just close all the trade, but you can configure it to what you like. You understand?
Mm.
You can configure it to what you like. You can put it to $10 to $20, just about any amount. So it should close all the trade at that point. So once it gets to that point, it closes. Then there's another one, lifetime loss limits. That lifetime loss limit, how much do you want how much do you intend to lose from the beginning of your trade with the robots till the end of the trade with that robot? We set it to 19,000. Meaning, if you lost $1,000 this week, next week you lost $1,000, and you are losing like that, in the 19th week, the thing will close all trade and the robot will not be able to open any trade again. So then enable trade close loss limits. This loss management, we enable them. If you disable the loss management, these figures will still be here, but when the daily loss limit gets to 9,000, it will not close the trade. It will just notify you. You understand? Hello? Hello? Hello?
Hello?
Okay, okay.
Can you hear me?
Yes, I can hear you. I can hear you.
Sorry, my network locked me off for a while now.
Okay, okay.
Yeah.
So,
Hello, can you hear me?
yes, I can hear you loud and clear.
Okay, I can hear you now too.
Okay. So
So
this,
you said lifetime loss limiter. That's where we stopped.
okay, lifetime loss limit is the total amount of losses that you have before the trade manager will close up all trades permanently and it will not allow any new trade again. This is done
Okay.
automatically. These two, the daily loss and the lifetime loss, is done automatically. Now, this enable trade close, if we set it to false, when this one is being triggered, it will not close the trade. When this one is being triggered, it will not close the trade. You get it?
Okay.
So we
Yeah.
set it to true so that it will close those trades. Then enable
Okay.
buttons. This enable close buttons, this is what it does. Now, we are running two trades already now, right?
Mm-hmm.
So this is a close trade button. So I can say if we are running at loss, I can just click on this one. It will just close um, any trade that is a,
Account I don't know in loss.
yes, it will just close it. Then if I say close profit, it will close anyone that is running on profits. Then if I say close all, it will close both loss and profits. So
Mm-hmm.
you see that they've been closed. So
Yeah.
um, that's the enable close trade buttons. Um, so auto close all trades is set to true. Disable auto trading is set to true, meaning it can close all trades, it can disable all trades. Then profile management. Now, this profile profits